Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 17, 2025, and we're diving into HITI's latest earnings report for the first quarter of fiscal year 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. HITI, a retail-focused cannabis company, has just released its financial results for the 3 months ended January 31st, 2025. Let's break down the key figures and insights from this report.
Revenue and profitability overview. Let's start with the top line. HITI reported a revenue of $142.5 million for the quarter, up from $128.1 million last year. John, what does this tell us about the company's performance?
HITI's revenue growth of approximately 11% year over year is a positive indicator, driven by strong sales in their Canadian market. However, despite this increase, the company reported a net loss of $2.7 million, translating to an EPS of 9.03 cents. This suggests that while sales are growing, profitability remains a challenge.
And how about their gross profit?
The gross profit came in at $35.4 million, slightly down from $36 million in the previous year. This indicates that while revenue increased, the cost of sales also rose, impacting the gross margin.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of Ru1, but the actual EPS was Nor 3. John, what are your thoughts on this miss?
The miss on EPS indicates that HITI's expenses were higher than anticipated, which could be due to increased operational costs or investments in growth initiatives. With only 2 analysts covering the stock, the forecast might not fully capture the company's financial dynamics.
Does this affect investor sentiment?
It could lead to some short-term volatility in the stock price as investors digest the earnings miss. However, the company's revenue growth might provide some cushion against negative sentiment.
Operational efficiencies and future outlook. HITI reported an operational income of $67,000, which is a significant drop from $2.8 million last year. What does this say about their operational efficiency?
The decline in operational income suggests that HITI is facing challenges in managing its expenses, which totaled $35.4 million. This includes higher salaries, wages, and share-based compensation. The company needs to focus on cost control to improve its bottom line.
And what about their future outlook, especially with the recent pause in their German expansion?
The pause in the acquisition of PureCan GmbH indicates a cautious approach towards international expansion. HITI is exploring alternative arrangements, which shows they are being strategic about their growth plans. This could be a prudent move to ensure they are not overextending themselves financially.
Key takeaways. In summary, HITI has shown solid revenue growth but continues to face profitability challenges. Their cautious approach to expansion and focus on operational efficiencies will be key areas to watch. Thank you, John, for your insights.
Thank you. It's been a pleasure discussing HITI's performance. Investors should keep an eye on how the company manages its costs and executes its strategic plans.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on HITI's performance in the comments below. Until next time.